Good, good. Everything is going exactly as I expected. Hey everybody, Walrus here from Walrus Street, bringing you your news and earnings for the week of May 10th, 2021. Just a reminder, I am not a financial professional. All information in this video is for entertainment purposes only. Before we go any further, I gotta say, I feel like crap. I've been sick for the last couple of days, and this video is probably going to be heavily edited because I'm going to be cutting out a lot of my coughing, so apologies in advance for that. I did go to Seoul earlier this week for my MTN interview. I was in Yeouido, Seoul, kind of the financial hub of Korea. It was a really great experience. I loved it. I'm going to link the interview below this video, so if you want to check it out, please do so. I had so much fun doing it, and I would love it if you guys could show MTN some love so they could keep bringing me back. As it stands, I think I'll be back there every 6 to 8 weeks. Downside, I think I picked something up in Seoul, higher population density than the city I live in, and I just feel terrible. The markets weren't great last week. The S&P 500 and the Dow, yeah, they hit all-time highs, but you can tell the money that's flowing into the markets right now is incredibly top-heavy. It's concentrated at the top because the NASDAQ is still down from where it was 3 weeks ago. The Russell is still down from where it was 3 weeks ago. The growth stocks, the small caps, the mid caps, they're really just struggling right now, universally. Let's get started with the news. Just a reminder, if you're new to the channel, I do share all of my TA, my technical analysis, every single week. You can find this link below the video. This is my practice that I'm sharing with you guys. Our first news story this week is actually kind of a breaking news story. This is something that's been developing Friday, Saturday into Sunday. Also, this presents a very intriguing trading opportunity for us on Monday morning when the market opens. And I'll explain that in a moment. And actually, this is going to end up being my primary options play of the week associated with this news story. So this is on Politico. This was the most in-depth article that I found on it. The jugular of the US fuel pipeline system shuts down after a cyber attack. The infiltration of a major fuel pipeline is the most significant successful attack on energy infrastructure we know of. This is the main fuel supply line to the US East Coast, and it's been shut down indefinitely after the operator suffered a large cyber attack. And you're going to see this throughout the articles that I'm about to cover. This presents a danger of spiking gasoline prices and a fresh challenge to Biden's pledges to secure the nation against such threats. Now, in almost all of the articles I'm going to be sharing with you guys, the writers are focusing on gas prices increasing as a result of this pipeline shutdown. If you want to play the gas angle on here, you can, but I don't think the gains on the gas angle are going to be as incredible as they might be otherwise. And there's another company that I'm planning on playing out of this. So the attack on the Colonial pipeline, which runs 5,500 miles, provides nearly half the gasoline, diesel, and jet fuel used on the East Coast, most immediately affects some of the company's business side computer systems, not the systems that directly run the pipelines themselves. The reason I started out with the Politico article is because this is the only one that really stresses it's the business side computers, not the pipeline computers. The pipeline was shut down as a precaution until the business side element can be investigated. The rest of the news articles are sensationalizing this and implying, not stating, but they're implying, because you know journalism today, we have to sensationalize everything, but they're implying that this is affecting the pipeline software. The Georgia-based company said it shut down the pipelines as a precaution and engaged a third-party cybersecurity firm to investigate the incident, which confirmed it was a ransomware attack. It first disclosed the shutdown late Friday and said it's also contacted law enforcement and other federal agencies. A third-party cybersecurity company. I bet you guys can guess where I'm going with this. There's already been a release from the White House. Shutdown that lasts more than a few days could send gas prices in the southeastern US spiking above $3 a gallon. Now, before my California viewers are like, wow, ours is like $4.50 right now. Remember, you guys live in a state that taxes everything like 90%. And before my Euro viewers are like, what's a gallon? It's like 3 3/4 liters in freedom units. It all depends on how quickly Colonial can restart the pipelines. One of the experts from Dragos, which is a company Politico interviewed for this article, said, we're going to know within the first 24 to 72 hours how extensive the attack is. And he believes it's going to be relatively short-lived. The Biden White House is actually allocating departments for cybersecurity type stuff, which that's not really surprising, but there's additional funding going towards that, towards making the US more prepared against cybersecurity attacks. And a lot of this is the fallout of the SolarWinds attack that happened in December. Mandiant, a division of the cybersecurity firm FireEye, is working on the investigation of the Colonial breach. A FireEye spokesperson confirmed in a statement to Politico. FireEye is the same company that discovered last year the federal government and about 100 companies had fallen victim to the massive SolarWinds hacking campaign, which the US had since blamed on Russia. And there's the rub. FireEye pops into the news again. Make no mistake, this is going to be one of the biggest news stories of the week as it unfolds. It just happened to break late Friday night into Saturday, so you may not have heard about it yet. This is the CNN article about it. Cyber attack forces US major fuel pipeline to shut down. This is the pipeline. You could see it going through the Northeast all the way down into Texas. So it really does service the Southeast with some of the offshoots here, all the way into the Northeast. This is a huge artery of fuel. CNN also confirmed that FireEye is leading the investigation through Mandiant. Colonial Pipeline is headquartered in Alpharetta, Georgia, and if this hack affected the business side computers, it most likely affected the computers in the Alpharetta headquarters. Alpharetta is a suburb of Atlanta. Mandiant, which is a FireEye subsidiary, is based out of Alexandria, Virginia, which is like 7 miles south of Washington, D.C., the White House, the entire government center. So Mandiant is located very strategically near the nation's capital, and it's actually not too far from Alpharetta, Georgia. December 30th, 2013, Mandiant was acquired by FireEye in a stock and cash deal worth in excess of $1 billion. So Mandiant is a direct subsidiary of FireEye. Now, FireEye is based on the West Coast, so it makes sense that Mandiant was the agency that they sent to respond to the hack at the Colonial Pipeline headquarters in Alpharetta, Georgia. Simply put, they can just get there faster. Now, I wanted to show you some of the other articles on this. This is on Fox Business. Fox Business is focusing on affecting the gas prices. If supply is not restored in the near future, what's going to happen is you're going to have more demand for gasoline than supply, and it will drive the prices, says an assistant professor of electrical and computer engineering at NYU. Wow, thank you, professor. That is so insightful. Supply and demand. Amazing. Fox is spinning the gas angle of this. Fox is also reporting and confirming that FireEye is the organization investigating the breach. Yahoo Finance printed a Reuters article also focusing on the gasoline aspect and the gas price aspect, but they did not mention FireEye. CNBC is focusing on the gas price aspect as well. They also did not mention FireEye. What's my point here? My point is only about half the news outlets right now are reporting FireEye's involvement through Mandiant. This is still the initial stages. Most people aren't even aware that FireEye is the one that's investigating this hack. So a lot of people, a lot of news, they're going to be trying to play the gasoline aspect on this, betting on gas futures, buying gas future options. On Monday, you're probably going to see the gas prices shoot up in the southeastern US, and you're going to see a lot of fuel stocks in the southeastern US rise as a result of that. But FireEye is the way that I think we should actually play this. I know I've covered FireEye on this channel a lot, and I actually just played a very unsuccessful straddle option 2 weeks ago. This is when people thought they were at fault for the SolarWinds hack back in December 8th. We had a drop from 1540 down to 1376. But once people realized FireEye actually discovered the hack, the stock price ran up from 1468 all the way up 2553 over the course of 5 trading days. That's like a 60% increase in stock price just because they identified a hack, got national coverage for it from the White House and other agencies. Since then, the stock price has been really steady. We kind of ended up dropping down, and then starting in February, we entered this channel between like $22 and about $19, this $3 channel right here. And we've been trading in this channel ever since. Right now, we're at the bottom side of the channel around 1931. The setup for this options trade is absolutely absolutely incredible. Because the stock price has been channel locked, we're at the bottom side of the channel right now. On top of that, the RSI is really low. The MACD is negative. This is a beautiful reversal setup. If we look at the options for FireEye, they're cheap. They're really cheap. I'm not just talking about like the share price. Because the stock has been so stable and so not volatile for the last couple weeks, the options prices are really, really low. This is one of the mistakes that I made on that straddle. There's no volatility for the stock. The stock price doesn't move very much except on external news like the SolarWinds hack. I'm actually looking at maybe buying some of the June options, June 4th, 2021 expiration, specifically the $22. Now I know that's a huge increase from where we are right now. That's $3 higher. But we saw the stock price went up 60% on the last hack announcement, the last time it was in national news, the White House was talking about it. This is all incredible press for the company. The $22 strike price calls are selling right now for 20 cents, so $20 a contract. I think I'm going to be playing some lotto tickets here. Now, when I say this is a cheap option, what do I mean by that? The stock price right now, just for math's sake, call it $20. So you could buy a contract for 100 shares for $20 at a share price that's about 10% above the current price. Now, if we go to the markets, we look at a high volatility stock right now, active volume, sundial's trash. Let's look at Ocugen. So Ocugen will go out to a similar date. So June 18th is the closest I can get. If we go up about 10% above, similar to the FireEye position, a single contract for Ocugen at a similar distance away from the price is going to be $265 for a contract. So right here, we've got $20 as opposed to $265. Now, I know everything isn't directly comparable. It's different industries, everything like that. But these options are incredibly cheap right now for FireEye because it's been such a steady stock. So my plan here is to just play a lottery ticket on this. I'm going to be buying probably 10 or so contracts of these $22 strike price calls for June 4th. And I'm just going to be playing the news on this. Once the news breaks, I'm assuming it's going to be favorable news for FireEye, then I'm going to sell off the contracts. To be clear, this is a lottery ticket. These are very far out of the money contracts. This is $200 that I don't need. If I lose it, I'm not going to lose any sleep over it. This is a pure gamble. This is a lottery ticket, but it's a good buying moment for the stock. It's a good buying moment for the options, and there's a strong pending news catalyst here. So I actually really like this. I have this gut feeling right now that FireEye is going to end up receiving some government contracts from the way that it handled the SolarWinds and hopefully the way that it handles this Colonial pipeline situation. That was a little weird. We don't usually do the option that early in the video, but it's tied to the biggest news story of the week and I felt obligated. Let's continue with the rest of the news. So on Friday, the April jobs report, payroll rose by 266,000, sharply missing estimates as unemployment rate increased to 6.1%. Sharply missed estimates? Well, whatsoever could those estimates have been? 266,000 versus 1 million expected. Oh, okay. So they missed by 75%. Yeah, that's pretty bad. The stock market responded by giving us the greenest day of the week on Friday. You know, sometimes in my mind, I think of the stock market as like an evil supervillain that's just sitting in a chair, monologuing and like doing this with their fingers with the cat on the lap. Basically, the stock market is Emperor Palpatine or Dr. Claw from Inspector Gadget. I don't know. But I just imagine the stock market sees this jobs report missing payrolls by 75%, and it's like, good, everything is going exactly as I expected. On top of that, unemployment rate was up 6.1% versus 5.8% expected and 6% in March. So none of this is good, but the stock market was green anyway. I don't know. This one was kind of interesting. 96% of US users opt out of app tracking in iOS 14.5 Analytics Find. On the new OS update for Apple iPhones, you can opt out of being tracked on certain apps. This has created a very negative reaction from some of the companies that depend on app tracking for generation of their ad revenue. Facebook. This is kind of what it looks like on the operating system. Allow Facebook to track your activity across companies, apps, and websites. Ask app not to track or allow. So you can opt in, opt out. And 96% of Americans are opting out. Facebook went so far as to take out full-page newspaper ads claiming that the change would would not just hurt Facebook, but would destroy small businesses around the world. Oh, my heart, it bleeds. Facebook, why didn't you just say so? Yes, you can track all of my app data. No, stop that. Based on the data from those apps that do the tracking, US users agree to be tracked only 4% of the time. The global number is significantly higher at 12%, but that's still below some advertising companies' estimates. So the global average of people that are agreeing to be tracked is 12%. US is at 4%. You know, this is kind of a cultural thing. Americans hate to be tracked. We hate to be watched. And, you know, I know it's crazy. But there's like seriously a legitimate subsect of Americans that refuse to get COVID vaccines because they feel like they're going to have a tracker implanted in them when they get the COVID vaccine. Now, I know that's nuts, but there are people who really, really hate being tracked. So this 4% figure is not surprising to me. If anything, it's surprising to the upside. There's 3 guns for every single American because Americans really love their privacy. Is this so surprising? No, it's not. I'm surprised that it's not 99% of people opting out. Next news story, I have to address this. I've been seeing a lot of articles like this, and I hate these. I hate these so much. Dogecoin is up 12,000% since January. Here's how much money you'd have if you invested $1,000 at the beginning of 2021. Stop. Just full stop. I'm not even gonna dignify this by showing you the amount. This is the most toxic mindset an investor could have. This is the kind of bullcrap article that causes people to end up getting FOMO and get burned on ridiculous speculative investments. When I see stuff like this, if you invested X at this time, then you would have Y gains right now. Stop. Just stop. You see a good investment, you think it's a value, you invest. Don't worry about what could have been. That is toxic. That creates a bad mindset for investing, and it causes people to make bad decisions in the future. Do what you believe in at the time when you're comfortable with it. Don't invest something because somebody else tells you to do it. Dogecoin is a weird cryptocurrency. It's not like Bitcoin. If you don't follow cryptocurrency, I'm just going to kind of give you like a little bit of information here. Now, there's a concept. Dogecoin actually could be a legitimate type of currency because it is inflationary like every other currency as we're seeing currently. The supply of Dogecoin is considered inflationary, not deflationary like Bitcoin. Now, for example, there are now 128 billion Dogecoins in circulation. This article was written in February. It's higher now. The rate of increase in the number of Dogecoins once fully mined is going to be no more than 5 billion per year. You can see over here the Dogecoin supply becomes predictable over time, and the annual supply inflation also becomes predictable. Now, in some ways, it becomes more predictable than governmental currencies for inflation. But keep in mind, Dogecoin's not really backed by anything. It just has value because people think it has value and because they say it has value. Caveat, it's not like US currency is backed by gold anymore. US currency only has value because people think it has value and people believe in America. So is Dogecoin really so different? Yes, but you know, you could at least see the argument. The circulating supply of Bitcoin, for example, is 18.7 million. Ethereum is 115.8 million. Dogecoin is 129.5 billion. That means there's been an additional 1 billion Dogecoin mined and put into circulation just since that article was written in February. I'm not telling you not to buy Dogecoin. I don't really care what you do with your money. But if you're buying Dogecoin, planning on holding it and planning on its value going up and up and up and higher and higher and higher, and you think you're investing in the next Bitcoin, you're not. You're basically hoping that more people invest into Dogecoin and drive up the price at a faster rate than Dogecoin is mined and put into circulation. One of the reasons Bitcoin's price is up so high is because it's mined so slowly. Dogecoin, on the other hand, is mined quickly. It's not going to hold value in the same way. I just want you guys to kind of realistically understand the Dogecoin situation. I'm not saying it won't go higher, but I am saying if people stop buying it, the price is going to fall off a cliff very quickly just because of inflation alone. Next news story. Now, we are are in a commodities super cycle. A super cycle is where all commodities are at record prices all about the same time. Now, commodities are typically cyclical, and the cycle period depends on the commodity. Each one is different. Oil is cyclical at a shorter rate than steel. But right now, we've got high oil prices, we've got high steel prices, high lumber prices, high copper prices, high palladium prices, high tin prices. Everything is high. Steel prices have tripled. Bank of America is saying this is a bubble and it's going to come crashing down. After bottoming around $460 last year, US benchmark hot rolled coiled steel prices are now sitting at around $1,500 a ton, a record high that's nearly triple the 20-year average. Everything from computer chips and lumber to chlorine and tanker truck drivers are in short supply. There isn't enough copper and lithium and other raw earth materials. Basically, we're out of everything. Everything's going to shit. All the commodity prices are high at the same time. That's what the analyst is saying. But at the same time, they're saying that we're in a bubble and it's going to pop and the prices are going to come down. And I don't really see how that's possible. Those two statements kind of don't really fit together very well. Commodities, particularly industrial and base metals, are responding to the perfect storm of drivers. There's organic demand, lingering supply disruptions from COVID, and a desire to hedge dollar risk in the wake of recent currency policies. The demand is from infrastructure. The US and China are using infrastructure development to get out of the economic funk from COVID. The supply disruptions are also related to COVID. The US has been printing a lot of money, which is leading to fears of inflation. Typically, when money inflates, commodities also increase in price because the money used to buy them is just worth less. If you go to CNBC, the Futures and Commodities Index, I mean, you could click on any of these. Even agriculture is being affected. I could go through all of these, but aside from gold, agriculture, livestock, metals, lumber, all at or near all-time highs. I know I talk about Cleveland Cliffs a lot on my channel. Right now we're sitting about $21 a share. The high was about $116, and this was right before the great financial crisis in 2008. And this was also coincidentally the last commodity super cycle. So I'm thinking we still have some room to run. Now I know other conditions aren't exactly the same, but I am going to be opening up some more calls on Cleveland Cliffs. ArcelorMittal, same thing. We could go out to the max chart and we could see right now we're at 33. The last commodity super cycle right before the great financial crisis, we hit 226. Southern Copper, right now we're sitting at 77. But if we go out to the max chart, we could see the last commodity super cycle, we were right around 30. So copper, this company is actually much higher. But you could see also the dip off in that super cycle. Back in December of 2020, to take advantage of the steel prices, I opened up some call options on Vail, Cleveland Cliffs, and ArcelorMittal for April, May, June, July. And so far to this point, I've closed up my April calls, my May calls, my June calls, all of them at insane profits. I just posted about this on Twitter. My ArcelorMittal calls, I just closed them at 330%. My Vail calls were closed at 104%. My Cleveland Cliffs calls in April were closed at 220%. My Cleveland Cliffs calls that I still have open in July are already up something like another 200%. This is something that I've been profiting from for months, and I still believe it has room to run. Last week, I talked about Southern Copper doing the option, and I entered a position on Monday morning. It's only been 1 week, and I have to look, but I think my option's already up like 80% after a week. Just these metals are going crazy right now. And when I read all of these stories online about empty warehouses and just people not being able to find the materials, I feel like there's still a lot of room to run here. As long as there's no stockpile, as long as there's no supply, how is the price going to fall? Earlier, we had the professor talk about supply and demand. I mean, that's all it is. It's supply and demand. If there's no supply, demand is going to be incredibly high, and it's a seller's market. Rocket reported their earnings, my baby. The earnings report was actually pretty good, but the stock price tanked like 17% for one reason. Look right here, select metrics, closed loan origination volume. The closed loan origination volume is the number of closed mortgages the company sells. Keep in mind, Rocket is diversifying as a company, but still the vast majority of their income comes from mortgages. Q1 2020, it was only 51,000, makes sense, COVID. Q1 2021, 103,000. We had a gain of 100% plus there. Second quarter outlook, closed loan volume of between 82.5 billion and 87.5 billion. Right here, this is the reason why the stock price tanked after earnings. They're projecting something like an 18% decline decline in the number of closed mortgages in the second quarter, but it was definitely a big negative reaction from this earnings report. Leslie's Pools also had an incredible earnings report and the stock price tanked. Their second quarter sales increased 52%, sales growth up 35.5%. Their net loss of $6.5 million compared to almost $30 million the prior year quarter. Adjusted net loss 10 times better than previously. They raised their sales outlook for the next year by $75 million. Adjusted their EBITDA by $25 million positive. Adjusted their net income per share by 10 cents. So how did the stock market react to this incredible earnings report? Well, earnings were released and then the next day the stock price dropped 10%. What? We actually ended up gaining back a lot of it, 3% just on Friday. So this option for me is in the negative, but keep in mind I bought the August date and I was playing on the chlorine situation. I feel just comfortable with it. Every company's been dipping after earnings, so this isn't really surprising. Also, if we go to the transcript of their earnings report, chlorine supply remains constrained for the industry and is driving higher retail pricing. Current pricing is approximately 40% higher than a year ago. We remain confident in our supply chain and our ability to serve both our existing customers as well as new customers. Chlorine retail inflation accounted for approximately 300 basis points of our reported sales growth. What did I say last week when I introduced the chlorine shortage and I talked about the percent of sales that chlorine is responsible for Leslie's? I mean, when I see an earnings report like this and I read the transcript and the CEO is talking about how chlorine prices increased their revenue 300 basis points. This makes me feel so good as like an amateur analyst that I saw this coming. I knew this was happening. I opened a position to take advantage of it. And now all I have to do is wait. I weathered the storm of the random earnings drop. They're just going to be getting money for this chlorine. Right now, the prices are up 40%. Analysts are projecting they're going to be up 70% by summertime, peak pool season when more people are buying chemicals to take care of their pools. I am more bullish than last week on Leslie's because here I have the CEO literally verbatim confirming what I talked about on my video last week. Let's take a look at the upcoming earnings for this week. We've got a lot of companies that the internet is interested in. Virgin Galactic, Palantir, Bionanogenomics. These are all companies that you see a lot about online. We've got Trade Desk and Magnite reporting this week along with Kubient. I think Kubient's on Wednesday. I did a DD on them. Those are all the ad companies. We've got Shift reporting along with Vroom. Now, I want to look at this because Carvana reported on Friday and there was a 5% drop in their share price, and I want to look at how that impacted Shift specifically. On Monday after close, we have Simon Property Group, which is a REIT that manages a lot of malls in America, shopping malls. And we've got Alibaba on Thursday. I'm interested in Alibaba, Xpeng, an EV manufacturer in China. Like I said, Bionanogenomics. With Bionanogenomics, if they have the UK NHS contract on this earnings report, then the earnings report's going to be pretty good. But I don't know exactly when the contract was signed, if it's going to be reported on this quarter or if it's going to be on the next one. So this could either be really good or really average. I want to give one of my viewers credit for this. I believe it was James who alerted me to this. He mentioned the idea that Shift might benefit because there's a semiconductor shortage for new cars, which means used car prices are going up and used car sales are going up because new cars just can't be produced right now. Used car prices set another record, blame the chip shortage. Here you can see the Manheim used car price index. Right now, the price index is at the highest value since 1995. Now, I'm not saying used cars are a commodity, but with semiconductors in short supply, cars with semiconductors fully fleshed out, computer systems already done inside the cars, in a way, they are kind of a rare commodity right now, and the price is going up accordingly. So I actually think Shift is going to have a blowout earnings report because of the used car prices, and I think the public won't react as negatively to Shift as they did with Carvana. Plus, the Shift price already dropped 5% in line with the Carvana earnings report, so how much more can it really drop on its own earnings report? No DD video this week. Like I said, I'm feeling a little sick. I just needed to rest. I hope you guys understand that, and I hope you enjoy this one. I think right right now, the money is not there to be made in growth stocks, and capital can be better spent elsewhere. I really think that playing these options like I've been doing the last couple weeks is going to be more lucrative than investing into growth stocks right now until the Russell kind of starts to turn around. So I don't really feel too pressured to put another small cap DD video out right now, but I will be doing them again. Don't worry about that. As always, if you guys are new to investing and you want to support the channel, please check out my Webull referral link below the video. If you sign up for a new account, deposit $100, you get a free stock, I get a free stock, everybody wins. Because I'm partnered with Webull, the free stock that I'll be getting is worth $30 or higher. And Webull has all these awesome analytics. That's the program that I was using throughout the video today. Also, if you enjoyed the video today, please like the video, subscribe to the channel. If you want to be alerted to all my content as soon as it goes live, make sure you hit that notification bell. All right, everybody, stay safe. Have a great week. See you next time.